Welcome to Global Tax Talks Tax in 60 Seconds. I'm Will Morris, and here are some things to watch out for in the coming week. First, while last week was definitely quieter than the week before, expect to hear more about Pillar 2 and the side-by-side agreement/package/system. While there are concerns about some details of the package, I think it's worth emphasizing there has been, in general, a sigh of relief from the business community on both sides of the Atlantic and much further beyond, that there was agreement rather than a move towards more conflict. And while the stability of the system is not guaranteed, it is with us for the moment. There are a number of things that could knock it off course, but this does allow a breathing space for reflection and, let us hope and pray, meaningful simplification. Some attention has now moved to more detailed questions. For US businesses in particular, there is the question of whether the side-by-side agreement, the 5 safe harbors, are self-executing under Article 32 of the EU Minimum Tax Directive following the publication of the agreement in the EU Official Journal. You'll remember that last October-November, some European Commission officials talked about the ECJ case law from 1962 that provided that EU law would have direct effect without national legislation if provisions that are clear and unconditional are published in the Official Journal of the EU. The side-by-side agreement was published in the journal on January 12, so is that it? Is it fully effective in every EU country without further action? Well, I was in Brussels last week, and the feeling there was generally not. There are a couple of countries where that might be the case. Cyprus, for example, issued a release last week saying side-by-side was now in force there. But other countries, the Netherlands out loud, and others more quietly so far, have said that they will need to pass national law. There is an understanding expressed in the side-by-side agreement that this may take some time, possibly even into 2027, as well as the fact that some countries cannot go retroactive even when change is favourable to taxpayers. So, the reporting position for 2026 is still pretty cloudy, unfortunately. Just to remind you, though, for 2024 and 2025, it is crystal clear everyone has to file. Questions have also been raised about whether other countries can qualify for the side-by-side exception. The answer seems to be yes, although the review may not make that terribly easy. The evidence required to prove out the foreign and domestic effective tax rates, at least based on US experience, will not be a light burden. And given the careful matching of the criteria to the US rules, other countries may need to legislate quickly. But it is expected that some countries will try to qualify as reviews start from mid-2026. Another question has been raised about the application of the UPE safe harbor. Towards the end of last year, Brazil was rumored to be in line for an exemption of some kind. So, as these review processes move forward, it will be interesting to see if they and others will qualify. Finally, some attention has returned to Pillar 1. US Treasury has made clear that this will not be the amount AMLC, but what it actually will be, we don't know. Most countries do not want to draw the attention of the US administration with TSTs, but the 2017 exam question, how to tax new digitalized business models that can earn income in a country without physical presence, remains a live issue. I'm sure we'll hear more on this in the coming weeks and months. Anyway, thanks for joining me, and come back next week so that you stay global tax ready.